Let's trade it. Let's talk about it with Mr. Scott Bauer for Prosper Trading Academy. Scott, good morning, sir. Liking that Colorado view behind you. I'm a little jealous. You got any Ross stores around you out there?
There's nothing within probably 100-mile radius of where I am. And quite frankly, I've never been into one even back in Chicago. How about you?
All right, you're a Maxinista. Okay, I get it.
No, I've definitely been into Kohl's and TJX and
there you go.
Rack. I love all those.
All right, so how do you want to trade this thing, Scott? What do you think?
I think you have to be really cautious. So first of all, when you look at option volume and option liquidity, it's not a heavy option trader. So markets tend to be a little bit wider. It's not as liquid as a Kohl's or a TJX or a Macy's. So you have to be a little bit cautious there. I'm cautiously optimistic on this print. I love the discount retailers. What I don't like about Ross stores, though, is what you and Alex, something you just mentioned, there's no e-commerce with this store. It's all brick and mortar. And I think that's just a tough way to go moving forward here. I do think they're going to report fantastic numbers from the second quarter, but I don't think they're going to give any guidance because they don't have that e-commerce moving forward. And what's happening with foot traffic all over the place, nobody knows. So I guess you'd say I'm cautiously optimistic. What do you do about that? Sorry about that. What do you do about that when you're cautious? What I'm looking to do, and especially because the options are not, real liquid, I'm going to try and sell next week's Iron Condor. So it's a put spread and a call spread. I'm selling the 120, 117 put spread to the downside, the 127, 130 call spread to the upside. Try and collect $1.50 for that. I'm basically looking for not a big move in Ross stores either way. My break evens on this at the end of next week, Oliver, to the downside would be 118.50 and to the upside would be 128.50. Anything outside of that, okay, my risk is completely capped off. It's completely limited. But again, I think longer term here, Ross stores as compared to some of the other discount retailers are they have a problem with not being in the e-commerce space.
Scott, I like the trade. It seems pretty appropriate given the fairly tight range Ross is traded in. I mean, it got down to 116, but for the most part, between 116 and 127 for much of this year has been kind of the meaty part of the trading range for this stock. And given that it bounced with TJ Maxx as well, maybe some of that potential post-earnings volatility has been taken out of this somewhat. Does it look like from the options that that's how folks are processing it, or does it still have a volatility expectation that is too much for what's already happened here? It seems like you're of the belief that that's the way to think about it.
Yeah, volatility is still elevated because of earnings, but I don't think it's as elevated as we've seen in prior earnings reports.
Okay.
As Alex said, market maker move is about $5 to $5.50 on this thing, which is not real excessive going into an earnings print. So the fact that we've seen this coiling, that we've seen, a kind of a range-bound trade, I think that's kind of factored in here.
Okay. All right. So looking for Ross to stay within this range. Optimistic, but a little cautious about the potential for this to compete with the e-commerce world. Scott, while we got you, how does it fit in to the overall market right now, these brick and mortar retailers? I mean, Macy's, Kohl's, all these upgraded guidances today seems to tell us something very different than a lot of the COVID news flow right now. Do you think we should be listening to what these businesses are telling us? They're not exactly the ones that are, easy to give big guidances on. I mean, Macy's, come on.
No, they're not. You're absolutely right. But again, those are stores with a big e-commerce, part of their plan, not just brick and mortar. So that's where I think the confusion, that's where I think kind of the muddied waters, if you will, kind of come in over the next quarter, maybe the next couple months or so. Listen, if we get past, and hopefully God willing, we will get past this Delta variant and people are out and about again sooner rather than later. Okay, my tune might change here. But again, moving forward longer term here, I don't see how a store like this can compete against other discounters selling the same sort of merchandise that also have a pretty robust online platform.
Okay. Scott, before we let you go, overall, the situation right now, do you think this market is in need of corrective measures?
I think we're kind of seeing it. I like this action that we're seeing, Oliver. I really do. I mean, we're not seeing massive moves one way or the other. Overnight action, obviously, people were a little bit freaked out last night. We saw the VIX up, from the low point yesterday before the Fed talk to where the high point of the VIX was this morning. It was almost a 30% pop. And that's almost all gone now, at least the pop from overnight. I like this action. I don't want to see a 1,000-point move. I don't want to see a 2 to 3% move all at once. This is really good trading action. Maybe we continue to grind to the downside just a little bit here, but I still think this is a really good opportunity. There's so many stocks out there, so many big cap stocks trading down technically to their near their 200-day moving averages, that if you're a technical trader, there's a lot of opportunity out there.
All right. Thanks, Scott. Like that thought. We got to jump. Good stuff. Mr. Bauer looking for a contained range for Ross Stores, ROST, after the earnings today.